The Money Show.
Personal Finance with Warren Ingram.
Warren Ingram, as you know, is the financial advisor and co-founder of Galileo Capital, and he is open to take your calls, your questions on 011 883 0702 and 021 446 0567. You might find it easier to ask your question on 072 702 1702 if you prefer to send us a voice note. Warren, we're talking about SpaceX this evening. Everyone's been talking about SpaceX. The largest initial public offering, the largest IPO in history. Everyone's been talking about Elon Musk, how it's not just the leader in what it does, but really the only person who does what it does. It has been difficult for a long time to buy shares there. So I suppose the question is, how do we think about it now? I mean, Warren, it's quite a big topic, actually.
It's a massive topic, and there are a few big issues that run in parallel when we talk about this company, because a lot of people focus on Elon, and you get the groupies that think he's just phenomenal, and increasingly a kind of a growing audience of people who really don't like him. And it started with politics, but certainly accelerated into kind of business as well. And in the past, his other big company Tesla has suffered because of Elon's actions outside of the business world. So I think a lot of people are talking about this, the company, the person, and then all the records that it's broken. I mean, to make him a trillionaire, I mean, it's going to put a huge target on his back, even more so than at any time before. I think I'm not sure anybody has been as wealthy as he is now when we adjust for inflation. If they have, it's a very, very small number of people in the world.
This is going to be a share that goes up and down. What do they call that? A roller coaster share.
It is. And I think we have very few parallels for something like this because the size of the business is just so enormous as it lists. But we can talk about a couple of companies that have done something similar in the past. I think the one thing to know is whenever a new company lists and it is hyped, it's usually a much smaller business, but very popular with investors and something that people want to own. And buying in, if you're lucky enough, and very, very few people were, but if you're lucky enough to buy it before it lists, well done to you. But for the rest of us mortals, we tend to have to wait and then buy it, as it gets onto the stock exchange. And I do think it's going to be one of those that, it's either going to be phenomenally rewarding or incredibly disappointing. But I don't think there's going to be kind of a muddling along with this with SpaceX at all. I think it's too radical in the goals that it has, and led by someone who is so ruthless in his execution that he's either going to make it a spectacular success or absolutely make it a flop.
I mean, there's been a little bit of talk of the possibility, and I always use this word very carefully, of a bubble. I mean, people have talked about froth around AI, and if something like that would happen, and let me not use that word, let me say a slight correction, or if some of the edge were to come off, I mean, where does that leave SpaceX? Could it be more or less vulnerable than other companies if something like that happened?
I think it might end up being alongside OpenAI and Anthropic, who both of them I'm sure will list sometime this year. I think SpaceX and those two will be the most exposed, the most vulnerable to the hype, and therefore most vulnerable if things go wrong. I think in all of those cases, people are buying into a very solid business plan. I think it's not the same as the IT bubble of 99, 2000, where lots of companies were listing on kind of fairly weak business plans. These are all of them very cash generative businesses. The problem all of them have, and SpaceX is the most obvious now, is that they're generating good revenue, but they're spending way more than they're earning, and they're telling everybody they're going to spend a lot more. And so if we do see a bubble forming and bursting, and there are lots of very well-respected people out there, Stephen, who are saying this is a bubble, and that SpaceX is kind of the poster child for the last stage before the bubble bursts, and none of us will know until it happens. But if that is the case, then I think SpaceX will feel a lot of pain, and I think investors who are buying in at current prices, $200 a share, hoping that they get another 50 or 60% jump in the next 3 or 4 months. They could be very happy, but I suspect they could be incredibly disappointed if the bubble bursts and SpaceX tumbles.
Okay, let's start with the problems first, and then we'll get to the positive. I mean, what are some of the big things that are worrying you about this?
I think to understand that this company lists and gives Elon unfettered control. He's the only person to appoint and fire directors, and in a listed environment, the way it's supposed to work is the directors are there to look after the interests of shareholders, and they call the CEO and the management team out and hold them to account when things are not going well or going according to mandate. But in this instance, it's the other way around. They are there basically to work for Elon, these directors, and so there is no one holding Elon to account other than Elon. And if Elon decides into the future to shift direction and move SpaceX from what was supposed to be a space and telecoms company, now it's a data company, and if he decides at some point that it should be a tunnel boring company and the like, he can do that, and there's no one to hold him to account.
So I mean, sorry to interrupt. He already has a tunnel company called Boring, but isn't this going against the entire way in which companies are generally managed and how they develop? There were times in history when you would have a single person who sort of created the company, but people decided not to do that. And the whole structure of having 2 sets of shareholders in the US is highly unusual. I mean, this is really going against basically all the lessons that were learnt in early capitalism.
They are, but I mean, I think it's a nuanced issue though, because you've got someone like Warren Buffett who had a lot of control over Berkshire Hathaway, and the fact that he did, and the fact that he operated so ethically was the blessing, but it meant that he could move through cycles where over whatever it was, 2 or 3 year period, things weren't going their way. He wasn't worried about being fired or being forced to change strategy. And I think one of the big critiques of companies at the moment, listed companies, is that they're operating in 3-month cycles. And if they don't make shareholders happy, CEOs can be fired. And so, the control of a company, I don't mind when you've got a visionary founder who is the reason for the success, having a good measure of control, but there should be accountability. So I think I'm kind of on the fence on this, because I think the corporate governance people have gone too far. It's over-regulated, over-controlled, and you've got more accountants and lawyers sitting on boards, then you've got clear business people who know how the business works. So I'm in favor of a visionary founder, having more control, but not to this extent. Someone should be able to fire Elon, and no one can, and that is worrying. And then equally that he is so mercurial. He's been known to sit on a live podcast and smoke marijuana and call people pedophiles because they disagree with him, and those kinds of things. That divisiveness that he has, and that volatility of personality, could be the reason why he's incredibly successful. But you have to put it as a risk as well, to say he could just lose the plot and cost shareholders now trillions of dollars.
What are some of the, I mean, he's divisive as hell. What are some of the positives? I mean, he is someone who, up until now, has had a really good touch.
I mean, just to think through that, one individual, has transformed 3 industries. He's certainly took on the motor industry at a time when you had very strong dominant competitors, controlling the Western markets, and then the rise of the Chinese manufacturers. And through all of that, you have someone basically creating the electric vehicle industry almost from scratch. It didn't really exist in a big form until Tesla really drove the case. So he's done it in cars. He's done it in the telecoms industry with Starlink, and obviously in rockets. There was no one else to call on when rockets weren't working very well. And you could just call on SpaceX to go and rescue astronauts from the space station. There was just no one else. So you've created someone someone has created an industry with reusable rockets, which has made a huge change to the rocket industry. So you have to say he's got a very strong history of looking at businesses and industries and taking them on in a completely new way and executing on a vision in a completely ruthless way. And I think that's back to the divisiveness. He's so singularly focused on an outcome that he drives himself, his staff, and regulators, everybody else to the outcomes that he wants. And so I think that ability to execute a business plan, I do think is a real positive for him, and it's one of the reasons that even if he is crazy, it is one of the reasons why his control of the company might be one of the big selling points here. But still, with that concern that someone should be able to fire him.
Someone who's quite similar in a way is Jeff Bezos at Amazon. I mean, it's slightly different. But is there a comparison between SpaceX and Amazon when it listed? I mean, it's a huge company now.
Yeah, I think it's the Amazon had the misfortune of listing, and then kind of a couple of years later got stuck in this IT bubble that burst. But where there's a very nice parallel is it listed and started a business also almost in a new industry, and I can't count the number of times Bezos told shareholders on calls and in meetings and in annual reports that we are not focused on short-term profits. We are going to spend and invest as much as we possibly can to grow the company as fast as we can. And so that attitude to ignoring short-term gain and and taking a lot of long-term, short-term pain, maybe medium-term pain as well, and focusing on the very long term is maybe the parallel between Amazon and SpaceX. And it's maybe the thing I wanted to say to people is that buying into a business like SpaceX might be short-term disappointing and long-term rewarding. And the reason is we always overestimate the impact of the new thing, whether it's a new technology or a new business doing something differently. And we think it's going to be so transformative. And unfortunately, we tend to be too optimistic on our timeline. So we think it's going to change the world in the next 1 to 3 years. And it tends not to do that. But wait 5 or 10 years and you look back and then suddenly you go, gee, a heck of a lot has changed, and it was a transformative industry or business. So I suspect that Amazon is showing us what could happen, because when you bought Amazon, it was a great story for the first couple of years. People would have kind of put in $1,000, and in a very short space of time, 2 or 3 years, they probably had a bit more than $60,000 in their investment, but then they got hit in the IT bubble bursting, and suddenly their $60,000 was worth $3,700. So that's an incredible drop. Having said that, if you'd bought your Amazon shares when it listed and you'd gone to sleep and woken up 10 years later, you probably were sitting on more than $50,000. So an incredibly rewarding story, but one mighty roller coaster in between. And I keep looking at SpaceX thinking to myself, I think we've watched a similar movie before, and I think that this might be the journey everyone's going to be on.
We do have a question that's come through this evening. It says, if the Iran-US truce holds, is it possible that inflation will fall again? There'll be low oil prices. I'm worried about interest rates on my home loan. I'm hoping interest rates will come down, aren't we all? All right, we'll get the view from Warren in just a moment.
The Money Show. Personal Finance with Warren Ingram.
Well, Warren Ingram, of course, with us. And the question for you, Warren, if the US-Iran truce holds, is it possible inflation falls again because of a lower oil price? I'm worried about interest rates on my home loan. I'm hoping interest rates will come down. I mean, Warren, that's actually the big question of the moment.
It is, and I think it's I think the question's probably a day or two old, because we've got obviously good news that it seems like it's gone from a truce to maybe something a bit stronger now, maybe a real ceasefire, and I think that the oil price has certainly responded very well. We've seen a big drop in the dollar price of oil, and alongside that a very nice strengthening of the rand. And those two are incredibly important, because we import all our oil and we pay dollars for our oil. So the fact that we're going to pay a lot less rands per dollar is good, and then a lot less for the oil. And so it will ease a lot of pressure on the kind of the country in terms of the fuel price, and the fuel price impacts pretty much everything else in our country. So I do think we will see an impact on reducing inflation. Unfortunately, the inflation rate doesn't move as fast as the price of oil. So it means we're going to need to wait to see that drop in prices over time. And certainly this Reserve Bank that we've got, I'm a huge fan. They are incredibly good, but they don't go on speculation. So they're going to wait for data. They're going to see it flow through our system, and then they will adjust accordingly. And certainly the last time they increased interest rates, I think only by 0.25. So I wouldn't be surprised once the data is positive that they certainly drop back by 0.25. But I wouldn't be holding my breath that we're going to see a drop of 1 or 2% from here. I think that would be a bit optimistic.
Yeah, I know that does make sense. All right, Warren, our sort of main topic around SpaceX. So we've been through the positives, the negatives, some of the comparisons with Amazon. So what do you do? I mean, how do you make a decision about whether you try and get invested into it right now?
I think there are a lot of people that are big Elon Musk believers, and if that's the case, then I think you need to take a really considered long-term view and say that you're prepared to ride this investment for quite some time, because I think it's going to be very, very volatile, and so you need to be prepared that your money might double over a 3 or 4 year period, and certainly could lose 60 to 80% of its value along the way, and maybe over a decade become very rewarding. But you need to back the strategy, and you need to back the ability for Elon to execute on his plans. I do think also, though, that a lot of people just would invest in the share because of FOMO, because of the fear of missing out. So no real clear view on how Elon will execute or anything about that. It's just not wanting to miss out. And if that describes you as an investor, I think this is not the share for you, because you could just be that person that loses 80% of your money at the worst moment. So I would say avoid, if you are a FOMO investor, if you're an Elon fan and you believe in everything, go for it. But be very careful, be very considered. Don't allocate too much money. If you don't know what to do, if you're buying an index tracker or a global general equity unit trust, a lot of those will now own SpaceX in time, and they'll become part of your investment universe anyway. So you might participate, and certainly if you don't know what to do what Warren Buffett's always done is, if he doesn't understand the business, he avoids it and he buys the things he knows well, and that certainly worked very well for him.
So I mean, there's nothing wrong with just doing what you were doing before. I mean, yes, some people may make money, but it's not about them, it's about you.
Yeah, I think a lot of the time we feel this fear of missing out, but the real regret in life comes from losing real money, money that you've invested, that you put in, $1 million and it's now worth 200,000. That's the kind of journey you could be on with a share like this, and so avoiding a business because you don't understand it, it's not a bad idea, because what you need to do is incrementally grow your money year after year and make sure that you get that compound growth. And so losing out on a gain that you never had, I mean, that's not really a real loss. That's just a story. It's a fiction. So I think we should be very careful to jump in boots and all on things that we don't understand, and be very happy to avoid the losses and the big gains on things that are just alien and foreign to us. And I think if people did that more consistently, we'd probably all make a lot more money over time.
Indeed. Warren Ingram, thank you so much. Really do appreciate it. The co-founder at Galileo Capital, and of course the certified financial planner. So interesting to hear the thoughts on SpaceX. Warren, thank you.